Today we're seeing market sell-offs across the board, whether it be the S&P 500, the NASDAQ, gold, Bitcoin, oil, the dollar index, everything seems to be moving lower. What's going on? Why is this happening? And is there some opportunity here? Let's jump into the video. Now you may be wondering what is causing such a sharp drop in so many risk assets. I mean, Bitcoin at one point was down almost 6% today. What's going on with CB consumer confidence? That is our topic of the day here, but it's not necessarily just this number. It's the context that this number fell into, and I'll explain what I mean by that. So if we take a look at the CB consumer confidence metric that came out this morning, it fell short at 98.3 compared to the forecast of 102.7. The market may have been looking at this number as a bit of a stronghold. Let's see how consumer confidence is feeling, and when it came in super light, it just added more evidence to this recent theme, and this is what I mean by the context of the market right now, that overall the consumer's feeling a little bit more of a bleak outlook, and so is much of the economy, as there's a whole lot of uncertainty with some of the recent changes that have been going on worldwide. Taking a look at the S&P 500, you can see we topped out here and have actually seen, for the first time in a while, selling that seems to actually have some follow through. What I mean by that is recently, anytime you get these kind of big sell-offs in the S&P 500, it's very hard to find examples of periods where there was not some sort of sharp bounce back or buyback into the market. I mean, this has been a theme recently, like the DeepSeek sell-off. We saw the market buy that dip. We saw tariff concerns, market bought that dip. The CPI day and the Fed day and all these key instances were bought aggressively by the market. That is until recently we've seen, actually for the first time in some time, some follow-through selling in things like the S&P 500 and the NASDAQ. And I actually think that there is some room for this to continue. Now, of course, we'll see if that ends up being the case, but stocks have been on a really good run for the past few years, and I remain bullish longer term overall. But right now, with this market sell-off that we're seeing and the mountain of worry, if you will, that the market has recently kind of piled up, specifically concerns about tariffs and concerns about outlook from key economic indicators that we talk about frequently on the channel, like, for example, the U.S. economic heat map, services PMI, GDP growth numbers, retail sales. A lot of these numbers have been missing forecasts. So it's indicating that the U.S. economy might not be this perfect, undefeated, kind of icon that the market has made it out to be. I'm not saying that it's weak dramatically, but it's missing some of the high expectations that analysts had for it. And what happens when high expectations don't get met? You get slapped with big sell-offs in stocks, but it expanded today. The sell-off really broadened out. We saw gold drop here, and you might be wondering, why, Nick, is gold dropping on consumer sentiment being weak? And by the way, the dollar index is also down, so it's not some massive win for the dollar today either. Silver down 2.4%, following through here from the recent dip that we've had, now turning into, in my view, more of a dip than I thought, maybe a bigger pullback happening here. And then you got things like Bitcoin breaking this key level of support, now into the 80,000 levels. And what is the big winner on the day? It is TLT, and I am happy that I've sat through a really painful and boring trade here on TLT for some time. We're finally starting to see some payoff to that hedge position that I took a couple months ago. This trade is by no means, completely overtaking the losses that I've recently had with some of my positions going against me, but it definitely cushions the fall, right? So while stocks are in kind of free fall, this TLT position is actually jumping up on this uncertainty about global outlook for economies. And so I think TLT may be a spot that I continue to hold this position in. It's been a nice bounce back trade. So I hold 3,300 shares of TLT at $89.10. So with this breakout, I'd like to stay long. Momentum seems to be picking up here for TLT. And with this break across this trend line level, I'm just going to continue to hold it in the account. This has been in my portfolio for some time, for a couple months even, as a bit of a hedge. Last time Trump had a big tariff war with China, TLT exploded. I've talked about this many times on the channel here as to why I put this hedge into my account, but you can see, look what happened back in late 2018, 2019, where we had tariff concerns. TLT absolutely ripped. So I'm going to continue to hold this chart. It's definitely our chart of the day. As TLT finally breaking out signals something for the rest of the market. Bond demand, kind of rapidly rising, shows that perhaps this sell-off that we're seeing in stocks has a little bit more room to go. Risk assets taking a serious break here. A lot of momentum stocks really getting hit hard. And while, again, stocks have had a pattern of bouncing back quickly from these events, I think it comes down to tomorrow's NVIDIA earnings to really decide whether or not this market is going to have a larger scale pullback or not. Momentum specifically for NVIDIA has already kind of been dry. We've just had this choppy market. But tomorrow, with their earnings after the bell, this has the potential to either kind of reverse course and revitalize some of the tech trade stuff or drastically worsen the situation. We don't know what NVIDIA earnings are going to be like, although we have seen many of the big customers of NVIDIA, like Meta, for example, and Microsoft and Tesla, a lot of these companies reassuring the market that they do still see dramatic amounts of capital spending on computer chips, right? So NVIDIA is a beneficiary of that. So there is that going into the earnings season. We'll see if those expectations do materialize in the stock price for NVIDIA. But if this thing tanks, it is likely to drag indices lower too. It's a pretty key story in the AI trade. Taking a look at the current top setups on the Edge Finder, we do still have readings for silver and gold. I'm going to watch for pullbacks there, and if I take any trades, I'll share them in our signals room. The link for our signals room in our Discord channel will be in the description down below. I'm also watching the DAX, and we've got some pound pairs on the watch list as well. We'll flip over here. I'll remove neutral readings here from the list, and we can see yen pairs continue to have been and be an incredible call recently. I wish I had more exposure to them, but TLT kind of plays proxy here. I've talked about this many times, and it's nice to kind of be validated in this theory, right? Yen pairs have been chopping around for a little bit, but yen pairs are down here today, but there's some interesting correlation. Let's take a look at the Japanese currency index, and what we can see here is that if we actually overlay TLT, which I just got done bragging about my position there. Again, I do want to disclaim, I've had some other trades that didn't work out well. I took another loss on, I took a loss on silver following the profitable position that I closed yesterday. I tried to re-enter, got stopped out pretty quick. So transparently, I lost some money on silver here today, but TLT is ripping and kind of helping to cushion that fall. So do want to make sure that if I'm sharing winning positions, I'm also making sure to share the losses, and I will always do that on my channel. So TLT, what you'll see is there's some positive correlation, pretty consistent positive correlation between TLT and the Japanese currency index. So this TLT play that I've made has also coincided with the readings that we're getting on the Edge Finder with yen pairs. So I am also still short Swiss yen, which this trade is working out, but it's not nearly as exciting as perhaps my TLT trade. So what we can do here is we can take a look at again, Swiss yen still looks good. I'm watching to see if we can break these lows, but across the currency world, yen pairs look the most attractive to me for continued downside move. Here's dollar yen continuing to trend down. See if we can break some key levels here when we talk about a key chart like this, dollar yen. We'll see if this can break support, and if it does, perhaps we have more room to the downside. I want to talk about a key zone-to-zone chart that I'm watching right now, which is Bitcoin. Bitcoin looks pretty ugly. I don't have a bullish or bearish kind of entry interest for Bitcoin. I'm not looking to short it. I'm not looking to long it at this time. But what I find interesting is you have this really key long-term level of support. I mean, this is a support level going back to November, which I suppose is not really super long-term, but in recent times, this has been a pinnacle of support for the bulls. And now we've got closure underneath that zone yesterday and follow through today. I wouldn't be surprised if you do get just a bit kind of a normal pullback on this sell-off. But if you do get that kind of bounce, the question will be, is the follow through here what we see next? I mean, you're already getting some pretty good follow through. You had a bounce here, break of that support. Sellers seem to be in control of this market right now, and I think that tells you about the broader perspective of the market. I think your market outlook here right now is pretty risk off, especially with my positioning being bullish yen, being bullish TLT. Risk off has been a theme on the channel here recently. It sounds like I'm being a doomer or a doom and gloom bear on the market, but I do think that it is very fair to continue to be cautious on a market like this where expectations are so high for stocks. And it took just a little bit of disruption here in the economic data to get some pretty good sell-offs occurring. Like I said, for indices, I do think that there is more room to the downside. If there's not, I'm not long or short on these. I'm going to sit on the sidelines. If we get larger dips, I'll probably buy for the longer term some positions via selling put contracts in the options market. But I'm not really looking to trade momentum-wise on the indices at this time. I rarely go short indices or gold. Somebody asked me recently, they said, Nick, I notice you're always long. Why is that? And I want to talk about that for a second. When you look at indices, the reason I very rarely short is because look at how they perform over the very long term. It's very hard to carve out a short side edge in the indices unless you're like a scalper or day trader that can really find those, and that's just not really my style. That being said, a way that I quote unquote short indices is by staying cash in my portfolio. That's my proxy for it. If I'm cash heavy, meaning I have positions that are not on, I just have cash sitting in my portfolio, I call that kind of quote unquote being short the market. Not really, but I could miss out if the market rallies. That's my way of thinking about it. Same thing for gold. I mean, look at gold over the super long term. I am a long-term perma bull on gold and really stocks too, but gold for certain. I like gold to the long side forever. It is the only kind of forever asset for me. I mean, maybe also the S&P 500 and the NASDAQ, but gold is a forever bullish thing for me. That doesn't mean that every day it's going to go up or that we could have serious market sell-offs or a year that's down. But over the long term, I'm always looking on the long side for gold because I think that that's where we're headed. They print dollars every single day, and there's reason to always have some gold exposure, in my opinion, in a portfolio. So that's my take on it. So for gold, I am actually short-term bullish as well here recently. If you do get a larger pullback, I will look for opportunities to potentially get long. And if I take those trades, they'll be shared as signals inside of our Discord room, as I mentioned earlier. The link will be in the description below. If you're looking to get funded this year, check out today's video sponsor, DNA Funded. They offer up to 90% profit splits, and they offer our audience significant discounts. Check out the promo code on the screen. You can see 10% off with code A1T10. They have unlimited trading days in their 1 and 2 phase challenge, and you can trade pretty much anything from this prop firm. So check them out if you have not already. Do your due diligence, see if they're right for you. Now back to the video. So we'll see. Again, like I said, I am overall willing to buy the dip on tech stocks and on companies that I like, financial companies, but I'm certainly not heavy going in right now for the kill, if that makes sense. Like, I have a lot of cash sitting on the sidelines ready to deploy in US stocks. I've been cash heavy. Warren Buffett is super cash heavy. Did you guys hear that? He is incredibly cash heavy. And people will say what they want about that. They'll say, oh, well, he's not trying to time the market. He's not bearish. He's not. But here's the thing. Warren Buffett had the Berkshire Hathaway meeting recently, shareholder meeting. He mentioned that, well, actually, I don't know if he mentioned this, but this is what the crowd heard. He basically doesn't have a whole lot of appetizing things to buy right now. You don't even have to hear him speak to know that if you know he has a whole bunch of cash. Warren Buffett's sitting on a massive all-time record high pile of cash right now in his portfolio that he runs for Berkshire Hathaway. So take that as you will, but actions speak louder than words. You can say, oh, Warren Buffett's not bearish, he's not trying to time it, but him basically saying through his actions, not deploying that capital into stocks, tells me that he simply doesn't have something that's attractive to him to buy. So is it fair to say Warren Buffett is waiting for better deals? Yeah, I mean, this is the value king, right? This is the most legendary investor of all time, and he's sitting around waiting for better discounts, better prices. And sometimes that can feel silly when the market's ripping higher, but when it is starting to drop, you're very thankful if you have cash on the sidelines ready to deploy should you get better discounts and better prices. Yeah, he just finds no stocks in the moment. So Marcus, you could say like, oh no, that's not bearish. I would say that is bearish. If you're saying I can't find good discounts, good deals, then you're saying the market I kind of think is expensive. And if the market is expensive, it doesn't necessarily mean you're shorting the market. I don't think he's short the market at all, but him being cash heavy, some would argue being a cash heavy position is kind of a way to short the market because you're just waiting for better prices. You believe that there could be better prices around the corner.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.